Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome back to India Fintech Diaries, the show for all things India Fintech. I'm your host, Hemant.
And I'm your host, Elroy. Hemant, this is our very first episode for 2024, and I'd like to wish all our listeners a very happy new year. And also a very big thanks for listening to us and being a source of encouragement while we ran this podcast.
A very happy new year from me as well to our listeners. As we begin 2024, we at India Fintech Diaries thought it would be a great idea to begin the year with a view on what would be some of the biggest trends for 2024. I think we can start with payments, Elroy. What do you think?
Excellent, Hemant. Payments has always been an interest of mine, and like every year, I think 2024 will be very interesting as far as the payment segment goes. I think we'll continue to see growth in UPI, and quite a few new use cases should be kind of unlocked as credit on UPI gets enabled. Also, in addition to this, I think 2024 will also be the year where NPCI's credit card product will start seeing an inflection point. I think it's got enough issuers to get that sort of a critical mass, and plus with that support it has for a credit on UPI, it should definitely have the edge to compete against the foreign networks. And I also think 2024 might be the year when RBI looks at widening the usage and acceptance of its central bank digital currency that it did a pilot of. And it might just move beyond the limited pilots it did in 2023 across 23 cities. In fact, I think it's already hit the very important benchmark of 1 million transactions a day in 2023 December. And I would not be surprised if we see this scaling up in 2024.
Makes sense. Those are some excellent points, Elroy. I think that 2024 will also be the year that we see widespread growth in the form of infra initiatives that we have seen. In fact, as we see the growth of account aggregators so far, both in terms of the number of financial institutions onboarded and transaction, 2024 should be a very, very interesting year for its growth. We should also see ONDC making more inroads into democratizing e-commerce, which will have its corresponding impact on the payments infra powering ONDC.
Hemant, 2023 has also been very, very, very tumultuous and interesting year for lending. And I think 2024 will actually be even more interesting as some of the initiatives of the previous year, like the credit line on UPI, etc., start having a bigger market presence and impact on the market. But to get a holistic picture of the big trends for 2024 as far as lending is concerned, I spoke with Jatinder Handoo, CEO of the Digital Lenders Association of India. And here's what he had to say about the trends that matter for lending in 2024.
As far as trends in 2024 regarding fintech sector are concerned, self-regulation and standardization appears to be dominant trends from regulatory standpoint. Just before 2024 could begin, RBI actually released draft omnibus framework for recognizing SROs for regulated entities. There was also an announcement regarding operationalization of fintech repository by April 24 and setting up a cloud facility for financial sector in India, which clearly shows, there is a focus on data security, standardization, and self-regulation. While we are at the dawn of new year 2024, the issue of unauthorized lending apps, cybersecurity, client protection, and fraud prevention still continues to top chart. Due to changes in risk weights in unsecured personal loans, there is also a framework for default loan guarantee, which RBI came up with a few months back. It is likely that most digital lenders, fintech players in credit will diversify their product offerings or their product portfolio, and there will be more focus on data and cybersecurity. More number of deeper partnerships may emerge with commercial banks under co-lending model and under default loss guarantee framework. Enhanced fund flow to small businesses will take place. I'm talking about MSMEs, although there are a lot of fintech lenders and there are also DLAI members who actually lend to small businesses. But what I'm envisaging is that there will be more fund flow to small businesses. Blue ocean areas like edtech, clean tech, healthcare financing. There will be more flow of funds, or in other words, the financing will move there. What we also need to envisage, 2023 was actually a very difficult year globally, when there were issues like restrictive monetary policies. There were challenges on climate change, high inflation, rising unemployment, and then there were wars in Middle East and North Africa region and Eastern Europe region. And since Indian economy in the globalized world is closely integrated with global economy, there were some effects on all sectors, including banking sector. However, the fintech and digital lending has shown a tremendous growth. One of the research I would like to quote from Standard and Poor's Global Market Intelligence 2023, which mentions that for quarter 3, as far as flow of VC funds, venture capital funds to fintech is concerned, India was among top 5 countries in the world. In terms of number of deals, it was among top 3 countries in the world. So, which shows that it was a positive development in 2023, which will lead to the trends in 2024 as well. Another important trend which we see, and since public policy is greatly supportive of digitalization overall, and fintech sector, which falls under the umbrella mission of universal financial inclusion. Now, government has a strong focus and support on emerging technologies like generative artificial intelligence, large language models, machine learning. So, fintechs using these AI ML technologies, unbiased algorithms, and similar technologies, we will see already there are fintechs who are using these technologies. More and more fintechs will emerge using these technologies. And finally, one last point, I think there are a few good number of fintech accelerators which have emerged over last 1 year. It is also anticipated that more and more freshly minted fintech enterprises will join the sector and make it more bigger and also more strong. So there is excitement in 2024. Let us all fasten our seatbelts tightly and be a part of responsible fintech, and let's see the fintech flight in 2024.
Those were some very, very interesting points from Jatinder. Now, if you see, Elroy, the insurance space has always had a very special place in my heart, and I'm really excited to see where the insurtech sector goes in 2024. Now, to get a better sense of the key trends, we actually spoke to a practitioner in the space. Here's what Dhirendra Mahyavanshi, co-founder of Turtlemint, has to say about it.
Artificial intelligence is actively reshaping insurance as well as the fintech ecosystem. I see a clear trend of AI algorithms streamlining underwriting processes and revolutionizing claims processing, quicker settlements, quick approvals, and overall much better underwriting using AI. The second key trend that I see is embedded insurance, where embedded insurance has been there for the last few years. In India, it is just recently taking off. It's started with some regulatory push, at the same time adoption by large distributors in insurance side to use API-centric models. We will see a lot of fintechs and insurtechs will be able to broaden their user base as distributors and also be able to enhance their profitability by using embedded finance and insurance products. We'll see great usage of big data. Basically, insurance is a business of data, and using which, if you're able to predict behavior, personalized offerings, create custom-made, specific, risk-based kind of an insurance product proposal, it should be a great value creation in the ecosystem, and I see that happening. We are seeing enhanced cybersecurity related sensitivity. So fintech companies are expected to invest significantly in advanced cybersecurity measures, including in insurance, biometric authentication, threat detection, other security protocols to protect customer data and also maintain customer trust. We might see blockchain evolve that can impact various aspects of insurance, fintech, We could see adoption of decentralized finance platforms, blockchain-based identity verification, smart contracts, especially in the health space, and extended to health insurance, could become more closer to reality. Overall, a much better and efficient financial ecosystem.
And I think 2023 also ended with some very interesting developments as far as banking technology is concerned. From the RBI announcing the intention of setting up an financial services cloud to new products in the
Hmm.
space being announced by the likes of Pine Labs that focused on credit card issuance, the year was certainly interesting. But what would be some of the big trends for 2024? Well, to understand this, I spoke with our next guest, Rajesh Mirjankar, MD and CEO at Kiya.ai.
If I were to name five trends for banking tech in 2024, they would be generative AI, which in itself will drive other trends too. In my opinion, generative AI presents the smartphone moment for true adoption of artificial intelligence across industry sectors. This transformative technology is really set to revolutionize areas such as credit worthiness assessments or risk evaluation and other areas like robo advisory services, which will mark a shift towards data driven decision making and also an unparalleled user experience. Now, generative AI as a technology will also be key in driving the next trend, which is hyper personalization. Hyper personalization will render banking products and services that are tailored to the unique needs of each customer across diverse financial verticals, rendering lifestyle banking. Recognizing the growing demand for personalized digital banking experiences, such as personalized navigation on super apps, for that matter, or personalized statements of holdings, enables banks to elevate the customer satisfaction and loyalty as such. So banks will be empowered to streamline experiences and facilitate better financial decision making for its customers using hyper personalized banking. And for a third trend, in my opinion, would be embedded finance that will redefine accessibility and the delivery of financial services with integration into the non financial applications. This will advance the financial inclusion across diverse sectors such as government, for example, or healthcare, travel, agri-tech, green tech, etc. In a way, if you look at it, embedded finance will transition open banking into open finance and gradually take this forward to an open economy, providing access and convenience to citizens. The fourth trend, in my opinion, will be immersive technologies. So, if you see today, there is a perceived lack of connect between the relationship managers and customers of banks, which is supposedly created by the very apps and open banking and online banking that were supposed to drive personalization. And one of the reasons for that is they miss the personal connect. Now, immersive technologies can enable interactions with digital assets and accelerating landscapes, thus really enhancing the user experience. This coupled with hyper personalized engagement with avatars as digital twins of, say, Grahak Sevaks or customer service agents will provide tailored products and services. It will provide social networking and commerce in the virtual world, which, when it's bridged with the real world with, let's say, IoT interactions or the conventional payment methods and logistics, will help in delivery of real goods and services as well. And so that takes customer services to the next level and also helps banks diversify into a new set of banking that will be driven with a ability to interact with multiple industries and embodify the aspect of embedded finance in both the virtual and real worlds. The fifth trend, in my opinion, will be point solutions on blockchain. Secure identity, for that matter, identity management. Using blockchain can certainly prevent identity theft. Now, when we look at the use of blockchain in insurance sector or for claims management or banking for streamlining cross-border transactions with CBDC, these will be relevant case studies which will find a wider adoption of blockchain, which is clearly beyond or devoid of crypto. And I'm tempted to just squeeze in the sixth trend. In my opinion, it will be artificial intelligence for fraud detection, including deepfakes. So those, in my opinion, will be the trends for 2024 in banking tech.
Very interesting. Actually, and Roy, if you see, wealth tech was late to the party of fintech, but 2023 saw very interesting new innovation in that space. And I think 2024 will be a watershed year for that space. 2024 should see several new platforms, products launches that will further allow investors to diversify their investments. And to understand more about what 2024 holds for specifically wealth tech, I caught up with Satyen Kothari, founder and CEO of Cube Wealth. Here's what he had to say about it.
2024 is poised to be a very big and interesting year for wealth creation in India. I say this because there are three macro tailwinds that are going to help out. Let me break it down. Number one is the geopolitical landscape. What do I mean by this? Well, the US is the biggest economy in the world. It's going to go through a couple of big events this year. One is the election for the US president. Around this time frame is when markets expect a lot, and new governments do tend to want to push the economy as well and bolster spending. So this is normally regarded as a big positive. Along with that, the US Fed has indicated that they're going to pause raising interest rates and maybe even start lowering rates, which helps in two ways. It helps US businesses and global businesses borrow money at a lower price, which gives a very positive, bullish flavor to the stock markets, as companies can tend to borrow for less, grow faster, and have lower expenses. And around this also comes a correlated fact that as the cost to borrow money go down in the US, that means the amount people are lending to companies also starts earning less. So they start looking for other markets where they can earn more. And that's why foreign institutional money should be expected to increase coming to India as US interest rates reduce, which is a nice correlation. Which brings us to factor number two, which is India itself. India's really positioned itself amazingly well in the last few years in the global economy as a high growth economy, which is well regulated, steady government, good, strong judicial system, and obviously very, very strong domestic consumption due to the size of the population and the growth in the population's income. So that is factor number two, which is really pushing India as the fastest growing economy in the world. And this is going to be a big, big element going forward. Factor number three is more domestic, which is the fact that there's so much fintech innovation happening in India that we are seeing a lot of innovative asset being launched in India. These assets are typically replacing the traditional role banks have played between matching people with money and people or businesses that need money. So you have what we call the alternative assets coming up, everything from P2P loans to loans going out to businesses for invoice financing, for leasing, etc. And these innovative companies, some of which we have partnered with, like Faircent, Grip, etc., are really taking on the role of the banks in saying people have money and other people need money. How can we use software to reduce the cost between the two so both sides benefit? Loans can be issued faster for shorter cycles with less paperwork, and people who have money can get much higher returns as well. All these three factors come together to create what I think is going to be a tremendous period for India. It's, of course, like anything in wealth generation, there's going to be ups and there's going to be downs. So at Cube Wealth, we always say take a long term perspective, number one. Number two, be disciplined, have a regular monthly SIP that goes across multiple asset classes in the short term, medium term, long term, low risk, medium risk, high risk. And three is have a well diversified, very high quality portfolio. Diversified means across all these asset types, alt assets for the short term, to mutual funds, to high concentration stocks for the long term. And high quality is one of the things very few people talk about. Go with assets that are diversified across risk so that you don't lose your money too easily. Go with advisors who have a proven track record across years and decades of doing better than the market so that you have the maximum chance of creating wealth for yourself over the next 10 to 20 golden years of India. This is indeed an amazing opportunity and time to become wealthy in India. And as 2024 starts out, I really wish everybody takes advantage to set up some healthy habits around investing regularly.
That's it from the very first episode of India FinTech Diary for this year. A very big thank you to all our guests who took time out to share their views on where they see FinTech headed this year. We will be back with another episode soon. So until next time, stay safe and keep exploring the world of FinTech.